Hey, home buyers and sellers, welcome to this week's market update, where we help you stay ahead of the curve and win in any market. Here's what's happened this last week and the last couple of days. Stocks and mortgage bonds were a bit lower Monday morning after the U.S. announced higher tariffs on steel and aluminum from China and the EU. Fed Chair Jerome Powell just reiterated that with tariffs still a wild card, the Fed will hold rates steady for now. So borrowing costs are going to stay elevated. Bonds dipped, but they did find a soft landing after the news. Home sales, the pending home sales, fell 6.3% in April. It was weaker than expected, while real active listings sit near 960,000, not the 1.94 million the Redfin headlines claimed. Jobless claims remain low, and ADP data comes out on Wednesday, followed by challenger cuts and Thursday claims report, which will guide Friday's jobs numbers. Those figures could nudge the 10-year Treasury, which is hovering just above 4.5%. So if claims rise, bonds rally. If they drop, yields could climb. But for now, floating makes sense. So how do buyers and sellers win right now? Marry the house, date the rate. It's more than a catchphrase. It's your roadmap. Fannie Mae's latest forecast calls for rates near 6.1% in 2025 and 5.8% in 2026, meaning most people buying today will refinance the next 2 or 3 years. So buyers, focus on the home you love. If you're making an offer, lean in on using smart seller concessions towards something like a 2-1 buydown to bridge today's rate environment. You'd start 2 points below today's market rate, 1 point below in year 2, then reset to the market rate in year 3, giving you breathing room until rates follow Fannie Mae's forecast downwards. Now, if you've been watching this video, you knew this 2 years ago because we follow the charts and historical data. It's nice to see Fannie Mae finally catching up. Sellers, instead of slashing $75,000 off a $775,000 home, consider looking at an aggressive 3-2-1 buydown. In this example, the cost for the buydown is closer to $28,000 versus a $75,000 price reduction. So you're keeping 50 grand more in your pocket. And in that first year, the buyer enjoys the same monthly payment if they bought a $630,000 home. It is a win for everyone. You preserve equity and the buyer gets immediate payment relief. So here's my take. We're in a prep phase. Powell's caution on tariffs means no Fed rate cuts in the short term. Inflation is easing, but risks still linger. Trade tensions are still smoldering and supply remains lean. Your advantage is preparation. Get your FastTrack approval, know your must-haves, and plan to consider using a 2-1 buydown for breathing room if you need it. Secure a home you love with a financing strategy designed for the next 3 years, and you'll win regardless of where rates go. Wherever you're at in the process, let's connect to ensure your offer ready. Stay tuned, stay ready, and as always, be the buffalo. Buffaloes charge into the storm. Get out sooner. The cattle in Colorado, they stay back and they stay in the storm longer. Don't do that. Be the buffalo. Thanks for watching, and we'll see you next week.